You are listening to the Manument Podcast. My name is Casey, and I'm here with my buddy Glenn Johnson, investment advisor and founder of Jabez Financial right here in the Uncasville area. All right, Glenn, let's get right into it today. And I want to start by talking about the Federal Reserve. For the past few years, the big question has been when the Fed would finally start cutting interest rates. But inflation has stayed stubbornly high. In fact, some are even talking about the possibility of raising rates again. So I want us to take a listen to investment strategist Liz Ann Saunders talking about this on the Barron's Roundtable.
I think even before the outset of the war, part of the reason why the Fed put itself in a timeout box was because inflation simply wasn't coming down to the Fed's target. And absent any significant deterioration in the labor market, I think the default switch right now on the part of the Fed is to not do anything. Traders can price in the possibility of a hike because of the energy feeder into inflation, but I think expectations around what the Fed is going to do are going to ebb and flow with every piece of news out of the war and every piece of economic data that comes in.
So, Glenn, if the Fed is in a holding pattern, what should retirement investors be doing right now? I want to know your thoughts.
Well, let's start with the fact that the Fed really can't lower rates until inflation comes back down to a more reasonable point. And they also need to leave room to be able to drop rates. So when the market bubble bursts, they can drop rates and stimulate again. Therefore, they kind of have to wait. Now, the problem is that when inflation comes down, it's usually due to an increasing unemployment rate. And no one likes that either. So in the meantime, investors really need to consider how they're allocated so that they don't get caught up in the next major market correction. So should the market have a major correction and unemployment go up, we could very well see a recession. And outside of the recession in 2020 that lasted a whole 2 months because the Fed just dropped rates and propped it up again, the previous one was from 2007 to 2009, and we're long overdue. When your neighbor loses their job, it's a recession, but when you lose your job, it's a depression. It's when things really hit home. And I remember a mentor of mine telling me once, he goes, people seem to think that this bad thing seems to happen to the other guy. But from my perspective, the other guy is you. And that made me stop and think about, well, what am I doing to prepare myself financially? Because it really is on my shoulders. So if you're nearing retirement or currently retired, and if your retirement accounts, you don't want to have your retirement accounts ride the market all the way down, because that's depressing no matter how you look at it. And we all know major market corrections happen, and they're even needed in a healthy economy that's growing. And everyone knows that things will always get more expensive. So inflation's going to continue, just at what rate? So we need to be smart about our investments and protect our financial future while increasing our wealth faster than the cost of living. And having a sound financial plan is really key in that. In fact, it can make all the difference in the world, financially speaking. And individually, we may have very little influence on the overall economy, but we do have 100% authority over our own personal finances. And, everyone likes it when the market's on the climb, right? And when the Fed cuts rates and stimulates growth, but at what cost? See, lowering rates inspires more borrowing. Now, imagine you were a bank and someone came in for a loan and they said they make $50,000 a year and they spend $70,000 a year. Mm-hmm. How much would you be willing to lend them?
Probably not too much, Glenn.
No. But what if they tell you, but they really need the money because they want to do a lot of really, really great things. And, would that persuade you to say, well, in that case, here you go. Have as much as you'd like. Mm-hmm. No, that'd be nuts.
Right.
Yet that's what our government has been asking of the Fed since 1913. The federal government takes in about $5 trillion a year and spends $7 trillion a year. And they keep borrowing more and more, and now they've put us $39 trillion into debt.
Well, I think that really puts it into perspective when you frame it that way, Glenn. And this may be where people start to feel uneasy because they may recognize that same kind of imbalance in their own finances.
Right. Now, on the other hand, businesses use debt for growth and expansion, and it needs to be used wisely. And if a business is run successfully, that initial debt or investment is turned into profit. But as for the government, they've never turned anything into a profit. But that's okay because the government isn't supposed to be a business. But that said, the government still makes up 1/3 of our entire economy. And it needs to be run responsibly and not be a financial sinking ship. So we don't have the luxury of running our homes at a deficit like the government does, year after year, racking up more and more debt.
So, I mean, I really love that analogy, Glenn. I really do think it puts it in perspective for people. So is that why having a plan that works, regardless of what the Fed does, is that why that is so critical, would you say?
Absolutely. We don't have that fallback option. For example, if a business goes south and it makes some bad investments, it can file bankruptcy and it can start over. The government doesn't have that option. Although other countries do, governments and local governments, they have filed bankruptcy. However, we can't run that risk of the United States ever filing bankruptcy. And we also, I want to clarify, we're not at that risk either. The U.S. dollar is still the safest place to hold assets, but everyone needs a plan that will work no matter how much the government spends and no matter what the Fed does with interest rates. See, investing properly isn't about buying a stock and hoping it goes up. That's gambling. But that's really that's really the most common approach. Because done over a long enough period of time, it doesn't seem all so risky because in the long run, it eventually does go up. So it may not feel so much like gambling, but it is, especially when we're in the kind of bubble we're in now. So, and that's why I invite you to give us a call at 860-288-9977 so we can have a conversation around where you're currently allocated and are you properly positioned for the next move the market's going to make.
When you use this term gambling, can you talk a little bit more about that? What are people usually doing wrong without really realizing it?
Well, people can do as much due diligence as they can, but in the essence of it, they're buying it and hoping for the best. They're listening to whether it's the news media sources or some analysts. But I was listening to Warren Buffett this morning, and he was talking about how if you could only buy one stock and you were going to hold it for 20 years, how would you go about choosing which stock to buy? Right? And there's a systematic approach to it. And I won't go through his 6 steps that he was laying out in that now, but there has to be a systematic approach to what you're choosing rather than just looking at the news headlines. So give us a call and come in for a conversation. What we'll be able to do is we'll have a conversation about what's going on with the economy, why it's being run the way it is. And I'm not going to tell you what to do. What you'll find is the right solutions will become obvious. And my clients end up deciding for themselves what they want to do. And that's why they never end up with buyer's remorse. But they have to have a good big picture of what's going on with a clear objective of what they're looking to accomplish. And then the most appropriate, suitable solutions become obvious. And that's why people can walk away feeling so much better with more confidence that they're positioned properly because they don't just have the right accounts and investments and holdings. They'll understand why. And that's what brings a lot of peace and security.
Thank you so much for listening to this episode of the Manument Podcast. Make sure you subscribe wherever you get your favorite podcasts so that you never miss an episode. And we will see you next time. Take care.
Investment advisory services offered through Jabez Financial, LLC, a registered investment advisor firm. Registration is not an endorsement by securities regulators. By contacting us, you may be provided with information about insurance products, including annuities, offered through Glenn Johnson, Connecticut Insurance, license number 4628409. The firms are separate entities. Annuity guarantees rely on the financial strength and claims-paying ability of the issuing insurance company and are not offered by Jabez Financial, LLC. Read your contract for restrictions, limitations, or penalties. Jabez Financial, LLC is not licensed in all 50 states. To find out if Jabez Financial, LLC is licensed in your state, please call 860-390-0093.